Hey, you probably clicked on this video because you're pretty smart. You're looking to buy a home and you might be struggling with that down payment. You might be trying to figure out, well, where are the best places for me to put my money so that I can purchase that home that I want? Well, if you stay tuned here, I'm going to show you how to get started. So let's look at what Rocket Homes is saying, right? Rocket Homes is saying that young people are being shut out of the home buyer market, that only 9% of millennials today actually own a home. And it's not because they don't want to own a home. Actually, of their respondents, about 50% said they wanted to buy a home. And really, what is the cause of that? Well, if we think about it, contrary to, and, I had some people trigger when I talked about millennials living in their parents' basement. That's not actually the case, right? A lot of millennials today have skilled jobs. They work, they pay rent. But what is it, right? It's not that they can't afford that mortgage payment. It's really that down payment. And the sentiment for a lot of millennials is really like, how do I save for this house? And what do I do if my savings is being eroded every day by inflation? Just look at where inflation rates are today. And if you're earning zero in the bank, well, you surely can't have that money being saved in the stock market, right? Because the stock market fluctuates. And if you're looking to buy a house in the next year or two, you got to really start to think about, well, what makes sense? Where am I going to put my money so that I'm able to buy that home? So let's take a look at something that we talk about a lot on this channel, which is life insurance, right? And you may be saying, well, I don't understand. Like, I thought it takes a real long time to build up cash in a life insurance policy. That's a traditional style policy, right? That's something that maybe your neighbor down the street that sells policies wanted to bring to you and show you. But that's not the type of policy that investors are using to go and purchase real estate. What they're doing is they're overfunding life insurance policies so that they have early and more immediate access to the cash value so that they're able to take that money and put it towards a home, use it as a down payment, right? All the different things there. And the better thing is that if they're buying it through their life insurance policy and not buying it through the savings in their bank account, well, what they're able to do is they're able to get multiple rates of return on that dollar. Because if they have a properly designed life insurance policy with a good, solid mutual life insurance company, that money continues to grow even though they've leveraged it out and put it into this home, right? So let's take a look at a couple things. Obviously, just talked about the leverage that they have, but also there's the growth in the policy. So on average, depending on policy, depending on carrier, there's about a 3.5% annual growth in the plan. When you add in dividends with certain companies, that number becomes a lot higher. If we look at historical averages, it could be even better than that. And if you're comparing it to a savings account, well, savings account at 0.2%, that's nothing really exciting. And that's where that real erosion factor happens because of the inflation. So if we're looking at life insurance, you're going to be able to gain and sustain that growth a lot quicker. And it makes it a lot better of a savings tool if you're doing it the right way. Again, there is no quick fix. If you're looking to get into a home, take a long-term perspective on it. Also, take a look at where you're saving your dollars, right? Because a lot of people, especially the younger generation, when they're coming into work, they're being told to go into that 401k plan. Why? Because that's what their parents taught them. That's what the work has. The work has an opt-out for the 401k, not an opt-in. So you're automatically enrolled in that plan. And yeah, there may be a contribution from your employer and you want to take advantage of that match. But if you're putting all of your savings into the 401k, well, now you're going to have a challenge. Does your employer allow for a loan against that 401k? Because it's not required that they do. That has to be in the plan documents of the employer. So check that before you're putting all your money into the 401k. Can you even borrow from it? And when you do borrow from it, do you understand what the consequences of that is? If your ultimate goal is to buy a home, maybe you don't want to put all your money into a retirement plan. You want to look at these alternatives, such as life insurance, done properly to have a savings when you're ready to go and buy that home. But don't wait, right? Don't procrastinate on it. Get a plan. If you click in the description box below, one of the team members at Epic will reach out to you and they'll help set you up with a game plan they can look at where you're putting your money currently today. Is there money leaking out in other areas that can be recaptured and put into a plan so that you're utilizing those dollars to buy that home that you want, that home of your dreams, to get started, right? So again, click in the description box below. One of the team members will reach out to you.